Welcome to the latest episode of Wall Street Wildlife. This is Luke. Christoph and I are joined for a very special episode this week. We actually made an appearance with our friends Brett and Ryan at Chit Chat Stocks for their own podcast. And so we're cross-posting the conversation we had with them a couple of weeks ago to the Wall Street Wildlife feed, so you guys don't miss out too. This episode really closely interrelates with last week's episode 65. We actually recorded these ones the other way around. So here's our original conversation, like a day before the really big DeepSeek news dropped. But in this week, Christoph and I are going to give you the lowdown on our thoughts on the Nvidia investing thesis, and actually why I think this is DeepSeek resistant anyway. Check it out. Hope you enjoy it. And if you enjoy this pod, go check out Chit Chat Stocks and maybe give them a like and a subscribe too. Have fun, guys. This is Wall Street Wildlife. Before we get to this week's show, a short word from our sponsors.
All right, if you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account 6% or higher yield that remains locked in even if the Fed cuts rates.
What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset's moving, so you can actually understand what's driving your portfolio performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares.
Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description. For an advertising-free version of the show, check out patreon.com/wallstreetwildlife.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome into another edition of the Chit Chat Stocks podcast. Today we have two guests on the show. We have Christoph Monkey at Wall Street Wildlife and Luke Hallard, and your nickname is the Badger from Wall Street Wildlife. You guys have been on the show before, and you guys, any listeners out there, might be listening to this on either of our feeds. We're going to cross-post them on the Wall Street Wildlife podcast and the Chit Chat Stocks podcast. So guys, welcome to the show. We're talking Nvidia, but first, I want to do a quick question. What do you guys talk about at the Wall Street Wildlife podcast?
Well, first off, Brett, thanks for the invite back onto Chit Chat Stocks. We've made appearances a couple of times, but this is a company I really love and I'm really looking forward to getting stuck into. We talk about Nvidia and like a whole bunch of other companies on Wall Street Wildlife, but we try and tailor our material more to like a beginning investor. And we go super deep and we do complex stuff as too. We try and make investing accessible and kind of fun.
Right, and we're interested in sharing deep investing principles that have served us well over decades of investing. And so many people might know about a company and they're interested in the deeper stuff, but they really don't know how to make it all happen. And so that's the purpose of our show, is to provide both ends of the spectrum.
Beautiful. So if anyone's listening to this on the Chit Chat Stocks feed, go ahead and search Wall Street Wildlife, or we'll have the link in the show notes. Go follow them so you never miss an episode. But we're talking Nvidia. Speaking of stocks that have served investors well, maybe one of the best performing stocks ever at this point. For some context, Nvidia is up 2,000% in the last 5 years. It's up a significant amount since you last came on the show in July of 2022, Luke, to discuss the company. For anyone that wants to listen to that one, you can go ahead and do that as well. Here's my first question. Why is the stock up so much? Why is it the largest company in the world now?
Well, if you don't mind, guys, I'm going to officially take a victory lap with this one. I'm in Chamonix on ski season. I've got my award-winning Mont Blanc beer right here. I won't open it until after we've recorded. I think this one deserves a victory lap because when I came
agree.
on your guys' show, like July 2022, Nvidia was like a baby little, only a $400 billion company, and I think it was the 12th biggest company in the world. And today, it's a $3.6 trillion company. And I think as of a couple of days ago, it's now the world's most valuable company, keeps vying with Apple. So, yeah. And if you go back to that July 2022 episode, I think when we had a conversation about the company, we nailed it in terms of the thesis and how AI and data centers were going to be the big driver. And that's really been the Nvidia story for the last, couple of years.
And there's an interesting backstory too. When I started my role at Seven Investing, I was the newest hire. We submitted picks for each month, and Nvidia was going to be my first pick in July, but I was out seniored by this guy, so I chose Cloudflare instead. But he got all the multi-bagger returns since that point, leaving me resentful, bitter, and plotting my revenge for the last 2 years.
Dude, you can't be too resentful, right? Because you and I are both, or we have at least at some point or another, been Nvidia shareholders. And maybe now to loop back to the question, like, why is the stock up so much in the last 5 years? It's a story about AI. Like, the company has a whole bunch of different segments. When we last spoke, gaming was its biggest segment, which like literally like the graphics cards in your PC, you play video games. But data center is really the whole story now. And that's been dominant for the last couple of years. And Nvidia is a story of AI. And I know we'll go deep into kind of why that is in today's conversation. But if you're trying to do AI, and really, like we used to say, every company is a tech company. Like really today, every company is an AI company. And if you want to do AI well, you're probably buying either directly from Nvidia to buy their hardware, or you're buying capacity from a hyperscaler who bought a ton of Nvidia.
Yeah, and let me color that. Let me add an additional shading to that. It's not every day that a paradigm shift happens. You could think historically, and the Earth is flat and then it's round. That's a huge paradigm shift. You have to wait centuries for some of this kind of stuff. Obviously, the internet, when that was born, humanity could not predict just how drastically everything would change. So out of the rubble came, most companies died from the dot-com era, but the ones that made it are the trillion-dollar companies, Amazon, Google, and so forth, right? So I think one thing that happened because of Nvidia is this paradigm shift, as Luke said, into AI being the next, call it exponential logical conclusion or furthering of the internet. And I'd like to add one other point. Nvidia was preparing for this moment for over a decade before anybody else. And that's the brilliance. That's why they were at the top. They had enough technological engineering expertise and foresight to have predicted this. And you can't just whip up something like their products out of thin air. I mean, it takes years and years of all kinds of brutal, deep, long-term thinking and strategic vision to make it happen. And so it looks like, overnight success, but they knew it way before anyone else.
And, we can talk some more of the numbers as we go through the conversation, but just at a headline, right? We've never had a company with a $3 trillion valuation, anything even close to that, that's doing the revenue growth and the net income growth that Nvidia is doing. Like in the most recent quarter, 94% revenue growth year over year and 110% GAAP net income growth. like that. Those are just insane numbers. This is completely different to anything we've ever seen before.
Yeah, and I've got some follow-up questions to that, but Christoph, I think you raised a good point, which is that I think a lot of people think that AI kind of just fell into Nvidia's lap and that they caught lightning in a bottle and just serendipitously fell upon a $4 trillion market cap. But it doesn't happen that way. Like you said, it seems like they've been preparing for it. And Luke, I'm pulling up the chart now from our friends at FinChat. Maybe I can share my screen for anyone that actually watches these. But I did not realize that when we spoke about this, gaming revenue was the majority of the business. You can see that's shifted dramatically over just 2-year span. We're looking at, I think, let's see what percentage. Data center by far makes up the majority now, and it's just mind-boggling to see the change. It looks like it's anyway. I clicked the wrong toggle there, but I'll move on. The question I guess I have for you guys is, why do they dominate the AI space? So like that's kind of been, I think most investors have the wherewithal to say, oh, Nvidia is the AI beneficiary. That's why they're, the largest company in the world today. But what makes them the AI beneficiary? Why are customers willing to pay up for Nvidia products?
So let me take the first shot at this. When I said that Nvidia knew or was preparing for this ahead of time, that's true. But the specifics of that is that it came from an insight Jensen had that gaming was plenty for that. That's how the company started. But then he was running into all these use cases from the academic world, where the scientists and the academics were basically hacking their chips in order to do something outside of gaming to take advantage of NVIDIA's GPU powers. So Jensen realized long ago that the future use cases would be outside of gaming. So what if they helped all these people, like in medicine and in science, use the chips for what they wanted them to do? And in order to do that, you have to program the chips in individual specific use cases. So that's when they took a huge gamble, financial and in terms of time. And I like talking about virtue, like character virtues all the time, like soft qualities. But Jensen said, this will not, sorry, I'm getting ahead of myself. They developed the coding program, a software program called CUDA, basically to slap on top of the hardware, which then allows the chips to be programmable, however the developer wants to program it. But Jensen had the wherewithal, and call it genius, if you will, to say this kind of shift won't show up on the balance sheet for years. And it's going to cost them a lot of time, money, and engineering resources to make it happen. But because of the vision, he said, this is where we're going, this is what we're doing, and we're starting now. And so the reason, Ryan, is because this main reason is because no other company essentially could give you the chips that you could turn into whatever you want. So I think of it as a software hardware stack that coexists as opposed to mere hardware that could be commoditized.
That makes a lot of sense. And we are going to jump into the competitive landscape here and why they dominate in market share. I'll just give a tease for the rest of the episode. We're also going to be talking about the AI super cycle, valuing the stock, and how you look at a cyclical industry. And you mentioned Jensen. We're going to talk about their culture, the management team, and the key man risk or potential key man risk with Jensen Huang. We're launching into this episode almost assuming that people know a little bit about NVIDIA. So if you're finding that this is a bit confusing, maybe go back and listen to the one we did with Luke in 2022. But I'd also recommend the book that just came out, The NVIDIA Way. That can give you more reference on how the company actually works, as well as, I believe, what are they called? The Acquired podcast has a whole history of the company and their product cycle. We're going to be focusing on the current competitive landscape and the future for the company with a focus on investing in the stock. So with that being said, let's hit the competitive landscape. This is something that's discussed ad nauseum. Let's do an intro one. Who are NVIDIA's main competitors today, and which ones are you the most worried about?
So as an Nvidia shareholder, I don't know that I'm worried about any of the competitors, but let's maybe think about who the competitors are. So, like the sort of traditional competitors would be companies like Intel and AMD. And AMD compete with them in data center and also in gaming and like a number of other areas. But I think you also need to think about the competitors to Nvidia as being their own customers in some ways, because their chips are incredibly expensive. And a large part of their sales are to the companies we call the hyperscalers. So companies like Microsoft, Meta, Amazon, Alphabet, like all of those guys buy a ton of Nvidia hardware, but they're also developing their own custom silicon. And maybe in the far future, because like Nvidia are supply constrained still, like there's so much demand for their hardware, and they, if anything, they struggle to provide enough hardware to their customers. So their customers are out there, funnily enough, working with the same sort of layer down suppliers, companies like Taiwan Semi, to manufacture the chips. I think we should think about the hyperscalers as potentially being a legitimate competitor. And maybe to bring it to life a little bit, Microsoft have got their Maya AI chip. Meta's working on their own accelerators. Amazon has got something called Trainium and now Trainium 2. Alphabet's got their tensor processing unit chips, which are in like phones, but also in their data centers. So, that could be a source of competition in the future. And then another sort of interesting dimension on the competitive question is I sort of picked out two quite interesting companies that are more writing the software stack that runs like actual large language models, so their own kind of AI solutions. There's a Chinese company called DeepSeek who quite recently announced really competitive AI outcomes with far less processing, like a tenth of the processing, and they have a really sophisticated large AI model, large language model that's competitive with the best that's coming out of companies like ChatGPT. Also, a company called Versus. They have something called Genius AI agent, which is doing the same thing, like delivering incredible AI outcomes with far less capacity. So you might even wonder if the software might, in the future, cannibalize the hardware. And the guy I sort of look to when I query this myself is Andrei Karpathy. And I think his view, he's come out fairly recently on this particular question. His view is that you can't be wasteful with the hardware you have, but you're still going to need this hardware. So it's more like the software efficiencies we're now getting are going to allow us to do even more, 10x, 100x what we can, but we're still going to need a ton of hardware. So it's a competitive environment, but I still feel Nvidia have the lead.
And on the hyperscalers, you mentioned they can technically, hey, why don't we just copy these products and vertically integrate and save ourselves some costs? But as we look at it today, they're still willing to pay up for Nvidia's products. Why is that? Why can't Amazon, Google, Microsoft, and others with essentially unlimited funds say, hey, let's just copy Nvidia's chips? What's stopping that from happening?
I don't know about sort of anything stopping them. Just it's Nvidia so they don't actually manufacture their own chips. They design the chips, and they've got a huge amount of knowledge and experience in that. And then they partner with Taiwan Semi to actually do the manufacturing. And I think a small amount of their manufacturing is also done by Samsung and other fabs. So you're right, Brett. The hyperscalers could copy them, but they're going to run into the same problem because everybody's working with these small number of like the real manufacturers, and there's only so much manufacturing capacity out there. So I think they are trying to do that, but then essentially they're in competition with Nvidia for the supply capacity, which, as we already acknowledged, is massively constrained.
What about, so you mentioned AMD and Intel. Where do they compete with Nvidia? I know you mentioned the data center side of things, but obviously if you compare the numbers head to head, AMD and Intel look like a fraction of the size of Nvidia on the data center side. So I guess why would a customer potentially opt for AMD or Intel's chips over an Nvidia one?
Yeah, and if we look at the market dynamics today, I think if you look at just data center, I think some figures were published at the end of 2023, and back then, Nvidia was about 65% market share, Intel was about 22%, and AMD had 11% market share, and then kind of everybody else was 3%. So Nvidia are like significantly leading. Like AMD do have a competitive product that they're working on, and their strategy tends to be try and sell something with equivalent capacity, but at a lower price point. But they're still like significantly behind Nvidia. I believe AMD's latest generation of hardware. So Nvidia have recently released Blackwell. It's their latest generation of chip. AMD have a competing product, but I think it's called the MI300X range. That's not going to be out for like another 6 months plus. So they're playing catch up, but they're always kind of lagging Nvidia as the leader. And this is such a critical space for the end users. Like let's say like the Metas and the Googles, they almost can't afford to wait that 6 months, because 6 months could be the difference between success and failure. In many ways, like Sundar Pichai and Zuckerberg, these guys see it as almost winner takes all, especially as we're going into, like, I don't want to go too deep into the actual technology, but if we think about, like, you've used, say, ChatGPT, and maybe use like Gemini and some of these other tools. Well, these tools are evolving now and they're becoming something quite different as we go into agentic AI. So essentially, like, this is a completely different paradigm. I think Jensen described it really well on a recent earnings call, where he said, like, everything we've built up to now, we're building tools like ChatGPT 4 is like a tool. You use it and you try and achieve an outcome. Well, AI agents are something different. They're things that use tools. So we've never really built something before that uses tools in the way that AI agents will. And so in many ways, I do believe we're at the start of the AI cycle, and we're going into something very, very big that's really going to fundamentally change the way, well, we all live, essentially.
If Luke, if you don't mind, let me take a step back to AMD and Intel for a second. A meta consideration is that Nvidia right now has kind of a strong monopoly, but that's no good for anybody. I mean, because Nvidia is aggressive in its pricing, and pricing isn't dropping, it's increasing, because Nvidia knows that no one can in this moment compete, and they're going to charge up to millions of dollars for a particular product. But ask any other company how nice it is to live in a world where, you know, your main source of AI chips could charge whatever they want. So people are sort of rooting, in a sense, for a company like AMD to find a solution. But to go back to the CUDA point, CUDA, the software, is, think of it as a bunch of libraries that have been made for particular developers' use cases. There's an adage in tech that says, go where the developers are. And so NVIDIA already has this massive library of software code, so to speak, that they've been working on and debugging for over a decade. So in order to make your chip run appropriately, that's what's going to make it go. So AMD needs to play catch up on that front via, say, more open source like stuff. And that's the question, like whether they can catch up to that along with the price policy. My own take is that they will eventually make some inroads, but now is not that time. That it's going to be, say, a year or 2 years out before the monopoly threat kind of dissipates a little bit.
And is that where,
I think if you're an investor, like, it's not going to catch you by surprise, I don't think. I think we're going to see this coming a long way out. Like, later we can talk about some of the metrics. I think we had quite a good question on Twitter about, like, what sort of things should you look at to give you a sense of as to whether the thesis is being eroded. I think there are some things that will give us a bit of a clue as we kind of look into the future.
Yeah, and when you mentioned the monopoly getting eroded, is that, I know we don't have a crystal ball here, but they have almost 100% market share right now in these products. Would they fall to, 70 or 80%? That's probably not the end of the world, if I'm looking at that correctly.
Yeah, I mean, this space is growing so fast. There's almost unlimited demand. I mean, if we just look at the news of like the last week, right? So the Trump administration have just announced what's that, Project Stargate, like, and at the same time, Trump has just repealed like a whole bunch of AI safety acts that were instituted under the previous administration. Like the gloves are off, and everyone's running at this stuff. Like there's going to be so much demand, and the demand is increasing at such an incredible rate.
It feels simplistic to just say Nvidia has a major technological advantage, because I think investors kind of think of a technological advantage as something that's a little fickle and it can go away. But it sounds like that is to some degree the case. They just are ahead of the game or ahead of the competitors. Is there any sort of reputational advantage that Nvidia has when it comes to like customers, the hyperscalers looking to buy chips? They have some level of trust that, okay, everyone else is going with Nvidia, that's what we have to go with as well? Or is it like Christoph, like you mentioned, they're looking for alternatives as well?
Yeah, this is where I think something like a company's culture comes into play. I've made some of some of the best investing decisions I've ever made were based on this kind of concept that's so soft and squishy, doesn't show up on the balance sheet, but it ends up making, in some sense, all the difference. In this case, I'm also thinking back to Apple under Steve Jobs, that when the culture from ground on up is built on, in NVIDIA's case, exceedingly hard, like out of their minds hard work, that these people are never leaving the office and pushing themselves to their extreme, along with the best minds that they were able to poach over the years from other companies. So you have the smartest people working the hardest, never stopping. That allowed them to innovate on how quickly they could continue pushing out the latest chips. So they basically made advances in terms of how quickly the upgrade cycle could happen. So now I know if I'm a customer, I could go to an older company that's going to give me the best thing like once a year, or Nvidia, because of their culture, that I know they're going to give me the best thing 3 times a year. And then once you locked in, once you pick, right, once you go with a company like that, the software part comes in, because the ecosystem locks you into, you can't just like willy-nilly in a commodified sense jump ship, because your developers will kill you.
But
That makes sense. Yeah, and
Christoph is like culture and warm fuzzy, and we love Jensen. But I saw a stat 6 months ago: 76% of Nvidia employees are millionaires. Like, there's another reason apart from culture that these guys are working there.
yeah, and then if you look at that book, The Nvidia Way, there's tons of stuff about their culture, and I thought one of the funniest ones from the book was, and maybe if you were a competitor reading it, it wasn't so funny. It was, I think Jensen was on vacation with his family, one of the few he takes throughout the year, throughout the year, and he calls up someone from work or a partner and something like that, and he just calls him and he goes, "All I've been thinking about is X product, whatever it was." And he's like, "I'm looking at my kids playing in the pool, and all I can think about is this." And the guy was like, "Go play with your kids in the pool. I'll get back to you." And I thought, man, this guy's kind of a maniac, but that would be extremely hard to compete with. Speaking of another company that seems to have the same like insatiable drive to just make their products better than everyone, that's Taiwan Semiconductor Manufacturing, the key partner for Nvidia to get these products to market, along with a few other companies. I think one worry people have is the fact that TSMC, they might be a monopoly themselves, and that they could implement the pricing power on Nvidia. What do you guys think about them having power in the relationship and how that could play out for Nvidia shareholders?
I think they probably do. And maybe a lens into this is like their prices have been increasing, and Nvidia are having to kind of play along with that. But we've seen like lots of nice words between the CEOs of both companies. Like they clearly see this as a very important partnership between them both. But like TSMC, Taiwan Semi, their capacity for 3 nanometer, which is like the the kind of latest gen of hardware, that's booked up for like years to come. So yeah, like they do have a kind of monopoly on the greatest manufacturing capability, and so that does give them a lot of strength. Puts them in the driving seat. I agree.
And these guys kind of came up together, at least over the last decade and a half. And I know business is cutthroat, and Jensen is famous for always being paranoid because death could come, at any moment. That's true. Nvidia almost died several times. But when you're talking about like two CEOs that go way, way, way back, trust each other, and have built their businesses together, to me, that signifies like, okay, they're, even if, I mean, worst case scenario, I think TSMC could somehow pull a fast one. I don't think they would for, I don't know what word I'm looking for here, Luke, but like for reasons beyond the bottom dollar.
Right, it's a little bit of game theory, right?
Yeah.
Where like you don't want to ruin your profits and they don't want to ruin their profits.
And there's so much profit to be made in this space
Yeah.
that like there's enough to go around, guys. I think they both see that.
Exactly, and then you consider the semiconductor equipment companies that are making boatloads of profits. Yeah,
I mean, there's so
you're
much
exactly
like
right there.
power, like the memory that interconnects the like just the like how you power, how you the land you have to put these things on, right? There are so many ways to play the AI super cycle.
Yeah, and one more point about TSMC. To me, having read The Chip War, which is a book I recommend to everybody, it's just fascinating about the geopolitical importance of this company, all chip makers, because national security depends on these devices. There is a risk that the potential war between China and Taiwan would disrupt everything. But now that TSMC has a foundry in Arizona in the United States, to me, that signifies less of a risk regarding that particular relationship. We need to see how it unfolds. I'm no expert in, foundries and in the technicalities, but Arizona is better than Taiwan, I think.
Yeah, I imagine if foundries, if it was easy to become an expert in the foundries, I imagine TSMC wouldn't be as powerful and have as much market share as they do. I do want to talk though, because it sounds like we mentioned this giant profit pool that exists, which ultimately hinges on end market demand. So we've got a couple of questions kind of specific to that. I guess maybe for starters, Luke, you mentioned that you don't necessarily worry too much about the competition. We asked what competitors worry you, and you said there isn't any that really worry you. Do you have any worries about end market demand?
All right, if you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account.
Public is a FINRA registered SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description. I don't think so. And there's so many ways to look at this, right? But it seems to me like we're still very early. Like we're it's almost like for the last couple of years, everyone's been excited about AI, but all we've really done is build like toy apps and kind of things to play around with. And it's only now that companies are actually starting to generate like real revenues and real cost savings. So that seems to me like we're at the start. And like another way to look at this is with everything we've said so far, we're talking about AI as in, like a digital assistant, something that's running on a computer. But we're on the verge of bringing AI into the physical world, either through like autonomous vehicles or like robots and like things in the home and things in factories and in the workplace. Like there are so many. I think you can make a strong argument that we are at the start, and there are so many other ways that demand can grow and grow for a very long time.
Yeah, and I'd love to add, this is where I love the historical consciousness stuff I play with all the time. Take yourself back to the internet, the start of the internet. Even people that were experts in, call it networking and whatever, nobody could predict or got even close to seeing what the internet would do to humanity. Nobody, right? Now take that same point and apply it to the fact that AI is like the internet on on what, steroidal bananas. like like nobody has an idea of just like Luke was saying, just how powerful this technology will be, but the fact that it's going to happen at a rate that is much faster than the internet is kind of the thing that, I guess you can model whatever you want. You're not going to get close. Like even something like curing cancer. I mean, I dabble, or I'm sorry, I do more than dabble in biotech, but there's a lot of misunderstandings between AI and how biology actually works. But even then, it doesn't mean like that we don't know how to do it now, that we won't cure cancer, say 10 years from now. Now, what does the world look like if cancer is all of a sudden cured? Our hospitals? I mean, it's like so far beyond our horizons that I think we're both saying the end market is not a concern. What might be commodified is the stuff that we already have and play with, like the learning language models. Like, sure, that might be, the initial products might be commodified, but
yeah, and that might be more trouble for OpenAI, but not necessarily Nvidia, although there's a lot of variables at play. I want to bring it back to the stock a little bit. I was perusing the conference call transcript before we recorded, and of course, analysts are worried about the next quarter and stuff like that. And what they seem to be harping on was the Blackwell system. What makes this important? This is their new, I think, flagship product coming out. And how do you think it can impact the company, its financials? Any insights for the audience here?
So, and you don't need to be like deep in the technology to understand why it's important. So Blackwell is just the next generation, and it's 2.5 times faster and more powerful than the prior generation. But Nvidia plan years ahead. They're already thinking about the version beyond Blackwell. What we should look at as we think about this question, though, is like how big can the demand get? And so I tried to get a bit of insight into like how Nvidia's biggest customers are thinking about this space. So if you just think about like the hyperscalers, so like Meta, Zuckerberg, Sundar, guys like that, like they do see it. Well, in fact, let me just pull a quote from Zuck, literally like 3 hours before we hit the record button on this episode. Like he's just posted on Threads to say Meta he's announced their AI plans for 2025. They're expecting to spend $65 billion in CapEx, which is way higher than forecasts. And they're building a 2 gigawatt data center that is, in his quotes, so large it will cover a significant part of Manhattan, right? That's just one of NVIDIA's big customers. We mentioned earlier the Project Stargate, like this year expecting to spend $100 billion. and then over the next couple of years, $500 billion. If we go back 6 months, I think Sundar said in one of the Alphabet earnings calls, like, to not be investing at the front has so much downside. Like, you'd rather make a mistake to the upside where you over capacity rather than fall short. And so, and that's like a sort of terrifying position for all of these companies. They get left behind by their competitors. So yeah, like the demand for AI is so significant and still growing at such a rate. I kind of don't see the end of it. I don't want to be like this crazy kind of, nothing can go wrong. The bubble cannot pop. Clearly it can. But right now, like, there seems still to be very, very significant upside.
And if I may, Brett, this is one of these insights that also goes back to culture. Even though Nvidia obviously has exceeded expectations and more financially and in terms of the bottom line, Jensen does not manage the company for short-term goalposts. He just doesn't. That's why they were able to invent CUDA. That was a hit to their short-term prospects. That means we know in their DNA, whatever they're releasing and however they're structuring their company is for the long-term goal. So even if they were to miss some short-term analyst estimates, they wouldn't care because they know that that would be a buy the dip moment, honestly, knowing that the reason they missed the short-term goalpost was because they're sacrificing, gamesmanship, financial gamesmanship for the very long term. And that's how Luke and I invest and think about investing all the time.
It's, to me, I think it's very easy to, I guess, underestimate the addressable market here. And I think perhaps nothing instilled more confidence, I guess, that this can go on for some time, because you see 100% revenue growth year over year on a business this big, and you kind of think, okay, yeah, law of large numbers, this is going to slow down, no doubt. But they're buying back stock, and they're buying back a lot of it, which kind of makes me think like they see something we don't. I guess my question to you is, we've referenced the internet age and sort of that paradigm shift a couple of times. And at that time, I think it was Bill Gates that had the quote, people overestimate the impact in the short term, underestimate it in the long term. Do you think there's some risk here that the end market demand is overestimated over the next 2, 3, 4 years, and there's some risk of overbuilding? Do you think about that at all? I guess, do you care about that if you're as an Nvidia shareholder, or do you kind of just try to look out beyond that?
Because I've got, like, I think just good investing discipline. I know Christoph loves to go like all in on massive swings and massive bets, but I mean, it is an expensive company. Although even if you look at Nvidia today on like simplistically on like a price earnings basis, actually it's making so much money. The valuation isn't completely egregious. It's something like 57, 58 times earnings right now. But I would always be thinking with like a margin of safety in my portfolio. So as much as I think the potential of the company is significant, like, the world could turn. Maybe we go back into an inflationary environment. Maybe the customers, the hyperscalers, suddenly they're not realizing the revenue growth that they expected. They're not able to get the efficiencies, so maybe they scale back their spending. There are still a ton of things that are outside of Nvidia's control that could go wrong. So with a company like this, much as I want to have it in my portfolio, I'd just be managing my exposure to it. Well, Christoph, you can tell us why, you're like 50%.
No, I'm actually going to tell you the opposite. This is a little bit of, portfolio management stuff, but when you're at a $3 trillion market cap, that is, the peak. That's Mount Everest. It's not hard to make some small mistake and all of a sudden you've lost $1 trillion in market cap. And if you know your history in Nvidia, that's what makes it such a fascinating company. They came to near death multiple times. because when you're working on the world's largest problem, you know the competition is going to be coming at you from every single direction. It's going to be ceaseless. And some of the reasons for their near-death experiences were both self-inflicted, but also because some manufacturing plant had some issue that had nothing to do with themselves. And so I think Luke is exactly right. I, this is a little bit of a counterintuitive, maybe even paradoxical statement, but as much as I love Nvidia for all kinds of reasons I'm sold on, and I would be cautious rather than like I'm all in when the valuation is the highest it's ever been. I mean, I'm sorry, the market cap is high. Anytime you're at the edge of something,
Yeah,
you don't know what's around the corner.
exactly. That's a great point. And for any reference, I pulled it up on FinChat, the forward PE here. Just as a quick plug, you can use our link, finchat.io/chitchat. Get 15% off any paid plan. The next 12-month forward PE is still 36.5. So, I mean, not crazy, but also if they are earning a little bit more than they usually do in the short term, if we're seeing kind of the super cycle play out, maybe that's a bit expensive, but there's a lot of factors at play. One other question I have, I'm curious you guys' take on this, is we talked with Nick and Casey Rossalillo. They mentioned something I hadn't really thought about before, and it's the fact that historically, the majority of the data center were CPUs. And today, it's honestly still majority CPUs, but they believe, and they're kind of experts on the semiconductor space, that eventually there'll be majority GPUs, which are, again, NVIDIA's core products. What are your thoughts on that, and whether it can bring even more, maybe as people worry about, the sustainability of these AI data center plans, this one could be something that could be a durable grower as we transition, the industry to that. I don't know. Any thoughts on that one, guys?
Sure. I'll offer just a little bit of a technological explanation. A CPU, for me, is intended to do really, really complex tasks that are kind of linear. What NVIDIA's discovery about GPUs was that they could throw basically volume, and via volume solve a whole bunch of problems from a different angle. And AI seems to me to be fundamentally a question of volume. Like you just need as much data being processed as possible. That's why GPU or GPUs are the way to go. And so I don't know. I guess the use cases for CPUs are, I don't know. I would think like staying the same. That business is not going away, but as demand for volume increases, that's why your bet ought to be on the use case that solves that problem, which are GPUs.
Yeah, it might be almost a question of the kind of problems that we're wrestling with like, the world's biggest supercomputers. And before the GPU, we'll have tried to solve those in a particular way. Well, the GPU essentially is, like Christoph said, like you can do, rather than just doing one thing incredibly well, you can do like a trillion things all at the same time. And the net result for certain kinds of problem is much more efficient. And so that's why, I don't know about like a transition from CPU to GPU. They're both going to have different kinds of things that they're good at, but increasingly the kind of problems that the world is trying to solve are more like GPU-ish kind of problems, because AI is consuming so much capacity, and that's a GPU question, not a CPU question. But we didn't even talk about QPUs, right? There wasn't like a quantum computing bubble like 2 weeks ago. So
Yeah,
we'll have
that
QPUs
one was
yeah.
funny. Who knows? Maybe that's going to disrupt everything. But that's there's uncertainty with all of them. Ryan, do you want to hit the Moat question as we move on here? It's a new topic.
I guess I think Christoph may have kind of touched on something that I had not thought about at all, but which is kind of the tie-in between the software and the hardware. But I guess this is probably it's the largest company that most people probably have no idea what they do. Where, they say it's chips, it's AI, it's like, but without really having a great grasp on it. What is the moat here, if they have one? Where do you think it comes from?
Yeah, so I said this on our 7 investing server some years back, and I think when I did, people were looking at me like I lost my mind. I said something along the lines of Nvidia's more of a software company than a hardware company. And obviously, the number of people that understood what I was trying to get at was zero or close to zero. But I think I could put it that directly. Nvidia's moat is CUDA. And because it's a network effect of developers that takes, let's say, a decade to develop, then it's not easily replaceable. And that's why AMD is having such a hard time. You can't just, it's not a hardware problem per se. But the fact that NVIDIA is also the world's leader in hardware, plus the culture that they have. So add up the pieces, right? The software network system, the best hardware, and the hardest working culture, all three combined, like what are your opponents going to do? How are they going to beat you? I mean, Luke alluded to AMD's future pricing strategy that will work at some point. The fear of a monopoly will help companies like AMD. But it's kind of like, what is Facebook's moat? In one sense, none, but the networking stuff is really, really valuable.
I think that's probably what, myself included, people that are not in the know on the semiconductor industry underestimated about Nvidia 2 or 3 years ago, which was we were seeing all this like major growth in the data center business and really just across the board. And you kind of like, it was hitting $500 billion market cap, and you kind of sit there and think, okay, we've seen this before. It's a hardware business. At one point, Intel was the leader in hardware. Like, it's going to, someone will come along and like the returns that Nvidia is getting and go after their business. But I don't think most people understand the stickiness from the developer side and that network that you talked about, Christoph. So yeah, it's a really good point. I guess, Luke, anything else in terms of the moat?
Well, I suppose we've talked about data center. They do have like a bunch of other segments. And I think one that's interesting, and I've always thought of it as optionality, is automotive. Like, I think it is it's always been their smallest segment. But like, if you take, say, Waymo, like Alphabet's Waymo out of the equation, and if you take, say, Tesla out of the equation, because although Tesla are a massive Nvidia customer as well, like, it's really Nvidia Drive, their platform, that they're putting into most of the other manufacturers of vehicles. Just announced a recent partnership with Toyota. They've had a long-standing partnership with Volvo. I think they've already now got like an Nvidia Drive Volvo car on the road. So this is not material to the thesis today, but it could be in the future. It could be.
Let's talk a little bit more about the culture. We mentioned that time and time and again, but it's important for a company, especially as an individual, where if you're not going to be in the weeds like these analysts trying to predict what the next quarter is going to be, maybe your edge is looking at the qualitative factors. And reading that book on the Nvidia way, it seems the one thing that came through is that they are ambitious, innovative, and I would say paranoid about the race they are in to compete. There were what I thought it might not be that fun as a worker, but as you mentioned, there's a lot of millionaires there of getting judged when you go home at just 9 p.m. on a Friday. Is that a bit early for you? And the question I have for you guys is, did they take the motto of only the paranoid survive and steal it from Intel, and that's why one of the reasons why they are so successful?
I can't answer that, I guess, specifically to the history of Intel. So forgive me. I'll take the principle here. Yes, they used that model and they integrated it. And it was also the book Innovator's Dilemma that they took really seriously from the beginning, because it almost killed them multiple times. So yes, there is that side of NVIDIA, which I personally would not want for myself, because they are workaholics times 20. So you have to give up everything else. And for some people, that's the life they want. And that's what you get in NVIDIA. So there's that side of things. But the other side, I think, is a more, I would say, generous view of Jensen. And he's said this publicly in interviews, a bunch of places, like, I want to torture my employees into greatness. And that's kind of a humanistic way of saying, instead of firing you, I'm going to, in a sense, embarrass you in front of the whole company so that everybody learns from the mistake you made, including you, but now the entire company won't make that particular mistake. So at the cost of being embarrassed, the whole company grows. That's kind of a mindset culturally where most of corporate America does not follow. Most of corporate America is interested in siloing their divisions and suites, and you have inner politics and you have reasons why the company stops being so efficient. But at NVIDIA, you have a flat hierarchy. And I talked to my students about this actually just on Thursday. The class I taught on Thursday was me in my role as a rhetoric professor saying, let's talk about why PowerPoints suck. And then we listed a bunch of reasons, right? And I said, and plus, think about what's happening in the PowerPoint. Somebody's spewing a bunch of data at you full of all kinds of assumptions that you don't have time to question because it's like a bunch of data coming at you, right? Versus what do they do over at NVIDIA? Jensen is known for his maniacal obsession with whiteboards where you're asked to, on the spot, present your idea, and 10 minutes into you talking, somebody, most likely him, is going to go up and start drawing right next to you and pointing out all kinds of flaws with your reasoning or, additional questions. So it's, to me, a culture of organic growth. And if you consider that you're dealing with some of the world's most brilliant people in that room, right, that are workaholics, yeah, they're addressing that only the paranoid survive motto from, I think, from the principles of how do you learn the most, the quickest, and then take those insights into the real world. So this is why I keep going on. Like, I don't see how you defeat a culture like that.
What happens when Jensen leaves? And is this the biggest risk the company faces in, let's say, the near term? Or, like, not the near term, but the intermediate term?
I'm going to draw on Apple again, because I think the analogy is a really useful one. I was actually I was a serious Apple investor, and I was obsessed with that company during the transition, the Jobs transition, because we knew he was going to pass from cancer. I actually made a bet that said it's a huge loss for the company. Obviously, you can't replace a once in a generation genius. But because Jobs was obsessed with infusing his own way of doing things into Apple's culture and DNA, that Apple would actually outperform expectations. And I think that's kind of what happened in many ways, because they were at the point in their growth where it was now more about execution, and Tim Cook was able to take over. But the company's culture was, embedded deeply enough. I kind of want to say the same thing would happen at NVIDIA, because the genius is spread throughout. I don't know if you disagree with that, Luke.
I don't know the team well enough. Like, is there someone you would, or when you read the book, that you point at and say, like, this is the successor in waiting?
Yeah, so there's no obvious successor in waiting. I just think these kinds of problems that NVIDIA is solving, they're company-wide problems. They're no longer exactly inventing something from scratch, right? So for some reason, I think this kind of risk is greater at Tesla, because Tesla's still depending more on that kind of visionary thing that Elon brings. So I don't know. I'm saying my answer to this question is it'd be a severe setback, no question. but I don't think it's an existential kind of setback at this point.
But can any replacement wear like the leather jacket in the same way? And what did we see last year? Like the guy is like a rock star signing like girls'
Yeah.
chests at conferences. Like, it's
Yeah,
going to
he
take a
goes to
hell
the
of a
market in
success of that.
Taiwan. He's
Yeah.
like a rock star going to the food market in Taiwan. There's people taking photos of him. Yeah, it's
Yeah, and you know what? And one other point. I mean, he has been with the company since the start, so it's 30 something years, right? So you can't take that kind of deep root, pluck it out, and everything's all good. But because he's also been shaping, his leaders for such a long time, I would here if Jensen stepped away, I would expect something like a 20% drop in the stock and then a slow recovery in the following years or months.
Okay. As we've discussed today, it seems like endless things to be optimistic about with Nvidia. But I'm going to force you guys to build a pre-mortem here. Why would Nvidia be lower? Why would Nvidia's stock price be lower than today 5 years from now?
I guess we talked about competition, right? So to loop back on that, like it could, the hardware itself could essentially become commoditized. The hyperscalers could start building for themselves. Maybe as TSMC ramp up their ability to supply hardware to meet demand, maybe that could be a one way that Nvidia gets hurt.
Yeah, and AI, it's like trying to predict the future with something that you can't predict. And so this is, I don't know what the fallacy is here, but it's what makes a game like poker so exciting. Like you could play the perfect way, but you're still going to lose 40% of the time because there's too many unknown variables. So I think like something like the unknown, the fact of the unknown makes it a built-in existential risk when you're starting at a valuation of $3 trillion.
And then
yeah, that makes sense. And even if it's flat for 5 years, or if it's down a little bit, hey, I don't think long-term shareholders are going to be upset. It's been quite the fun ride. I want to make sure we hit. You mentioned the Twitter question from a Mill. He said, and I think you hit some of this, but I just want to ask it just in case. I'm concerned about the cyclicality. If the growth persists, it's undervalued. But if Nvidia's customers can't make a profit on that investment, we're looking at a bubble. What indicators do you monitor to determine whether the growth will continue and not collapse? I think it's a good question to lead things out here.
Yeah, it is a really good question because it's quite hard when you look at a company's 10K or 10Q. It's quite hard to find like leading metrics. Often it's a lens into the past and you can't make useful forecasts. But I think here we can start to think about that question because, well, Nvidia's main customers are all public companies. So you're going to see, let's say, for example, like we are at the cusp of companies like Alphabet and Meta and these guys turning this AI capacity into increasing revenues, cost efficiencies, like generating economic value from this incredible spend. And maybe they don't realize that value. We might start to see comments from CFOs challenging the spend and maybe putting a cap on the spend because they just can't turn it into the value, because there is like there might still be like a lot of hype built into this. Everyone's very excited. They're afraid of being outcompeted. But there's a question that we don't really know the answer to right now, which is, can the techniques we're using, can this stuff scale? Like maybe we throw more and more hardware at these problems, but actually we just can't scale and we can't get ever increasing benefits out of it. So I would be looking at the 10Ks and the 10Qs of the customers. I'd also probably be looking at what's happening in the macroeconomic environment. I think we said earlier, like if we do go into a rising rate environment, that's possibly going to hurt Nvidia because, it's not just us guys on the ground who maybe have a little less expendable income. Like it's big companies too, because they're having to pay higher interest rates, or they're feeling the pinch themselves, and they have to start getting cost efficiencies. So I do think there are a few areas you can start to look.
Yeah, and of course there is the foundry issues and over reliance on things out of Nvidia's own hands. You never know when something might blow up.
That's a good point. Yeah, they are reliant on so many other factors, and they might be the most important part of the supply chain, but there are many other important parts as well. Well, this has been a fantastic discussion, guys. I hope the listeners got a lot of value out of it. If you're listening on the Wall Street Wildlife feed, go ahead and follow the Chit Chat Stocks feed as well. But for those that are listening on the Chit Chat Stocks feed, guys, where can listeners find more of your work, follow what you're learning about, writing about, talking about, anything investing related?
I would point your listeners to our Patreon page. It's patreon.com/Wall Street Wildlife. And we're building a fun little community of people who love investing, and it's super friendly and relaxed, and we have a really good time. I throw rotten bananas at Luke all the time, and he find out how we got karaoke. We got
But we do we spend a lot of time on X, so you can find me over there. I'm at 7 Luke Hallard.
At 7 Flying Platypus.
All right, beautiful. Yeah, that's the Wall Street Wildlife Podcast. Check out all that stuff as well. Let me hit the disclosure. We are not financial advisors. Anything we say on the show is not formal advice or recommendation. Ryan, I, or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning into this episode, and we'll see you next time.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.